Welcome to Coleman Report Live. I'm Bob Coleman, and we're talking Main Street and the small business lenders who help it grow. Anna is pinch hitting again as producer. Good job, Anna. Thank you. And we have Delaney and Lance. Good to see you both. Let's go. What are we talking about? There we go. You know the certificates. Next slide. There we go. Fraud Friday. Mr. Delaney bribed an SBA employee. Tell us about that, Delaney.
Yes, this is quite a story. I'll be interested to see more about this later on. Mr. Delaney was just given a 6.5-year sentence. He was working with another individual, Joe Greenberg. He was a tax collector who was on pretrial release at the time of this fraud scheme.
Oh, I didn't know he was pretrial release. So.
He was. There was an added layer of fraud going on. So they were bribing this employee to create the applications, approve, process, and make sure it gets through speedily or speedy. So this was done for many ineligible businesses. A lot of them received somewhere in like the 100,000 plus range. And so that same employee was given bribes and kickbacks to do this. They also brought other individuals into the scheme to work with this same SBA employee. And same thing, they were giving $1,000, $3,000, various amounts of money to this SBA employee.
Lance, that's a lot of money to lose your career and go to and get us.
Yeah, I wonder if this employee is still an SBA employee. I would doubt it. Yeah, you know, getting 3,000, 1,000, 1,300. That's not. There's no reason to commit fraud. But, you know, committing fraud, running your career for that amount of money is...
Well, as always, Lance, there's another side of the story. Delaney, we do not know the name of the employee, but we think there's a familial relationship.
Yes, there is another individual who worked with Joe Greenberg who has already been sentenced or found guilty. And she claimed that this individual at the SBA was her sister. So we don't have names, but it might come out later.
I'm sure.
I do want to say, I think this is an incredibly rare case, though. Yeah. I mean, this person just started working in 2020 before this occurred. So they were maybe there for a few months at most before this happened.
Well, this Mr. Greenberg was quite a character. He was the he had voted in as the tax collector of a Florida county. And so he had to resign that. And how much money did he end up making through all his fraudulent schemes?
Oh, goodness. And Joel Greenberg, I'm not as sure, but it was a good amount of money. He's quite the topic of conversation.
Yeah, it was, I think, $4 million and with the requisite cars and trips and everything else. He recruited a number of people to help him in his enterprise, and the tentacle is wide, and he hurt a lot of people.
Yes, there was a quote like that. Somebody referred to him as a criminal octopus, I believe.
Oh, that was the judge. Yes, you're right. Yes. The criminal, I love that. That was.
That's interesting.
Be careful who you associate with and learn to say no. Next.
Well,
I'm sorry, Lance. Go ahead.
No, committing fraud is a terrible thing, but, you know, so many of these stories break my heart because somebody did something and they don't think about the long-term repercussions of doing it. I mean, they're not likely to work in the industry again.
Oh no, or any financial industry or in any. Yeah, I mean, it's sad. It's sad. What did Mr. Wade do?
Yes, Chad Wade, he paid more than $4 million to settle allegations. It was claiming he applied for 4 EIDLs and 14 PPP loans asking for $1.5 million. Of course, they're saying he sent false federal tax documents, false state tax documents, false employee wage reports. And they're alleging that this money may not have been used to help his business very much. I'm not sure if a vacation villa in Mexico and a 1981 Ferrari are important to your business, your real estate business.
Did the Fed seize villas in Mexico?
You know, I don't know how that would work, Bob. I'm sure they can. Literally in seizures that I've had an opportunity to to look at. They've seized anything from homes to cars to boats to cash accounts. So I don't know why they couldn't get a Mexican villa.
Yeah, we have the treaties to do that. Mr. Acevedo, a wannabe small businessman, wanted to resell iPhones. But the problem is, where did he get the funds to purchase the iPhones, Delaney?
Stolen identities to obtain EIDL loans. That is how. He was taking identity information from people, creating bank accounts. So whenever he received the EIDL funds, he could funnel them into that account, or those accounts. And he had many co-conspirators from what I can see. They were all going and purchasing iPhones, about $250,000, and reselling them. From there, it was laundered. Some of it was said to be sent to people in the Dominican Republic. And he got a few years.
Hey, Anna, bump the slide for the next slide, by the way. So there we go. And how many people did he got 3 years, and how many people he stole people's identities, and how many different EIDL loans did he get? Do we know?
We do not know. And another one of the main co-conspirators did not plead guilty. So I'm sure there's some information that may be somewhat hidden for his trial.
So these guys took the money, got debit cards, and bought iPhones with them.
Mm-hmm.
And then they resold the iPhones for cash. And there's a paper trail or a plastic trail that the feds aren't stupid. So and it just I guess they get away with it once. They think they're scot-free. It's sad.
Mm-hmm.
I'm going to talk about our newsletters. Lance, this is near and dear to your heart, the SBA 7A closing report. Lance this week was on perfecting title for SBA loans. There's specific wording that you have to do. And Anna did a nice job putting that together. And the other newsletter we have, well, let's finish with the closing report. Anna, bring up the map. This was interesting. In the United States, there's two ways to secure collateral on real estate. One is through a deed of trust and one is through a mortgage. And Lance, in looking this over, I did not realize that you had states that could go either way, either a mortgage or a deed of trust. Now, the good news is I'm not going to go and tell you the legal difference between the two. So no. breathe easy. But Lance, what deed of trust is basically, as far as the lender is concerned, is the same. There's no difference.
Yeah, the deed of trust and the mortgage are pretty much the same type of collateral document, and not huge differences. Thus, we have states that will accept either or.
But I think what's important is that you understand, if you're a national lender, that individual states' requirements, because each state's a little bit different in terms of of what lenders have to do. Some lenders, you have to go, I know in California we go through escrows, where in mortgage states you can go through attorneys. And so whatever the common, best practice is, follow, but be aware one size does not fit all, Lance.
No, and it's different from state to state, just like liquidation, guys. Liquidation, the foreclosure process on commercial and residential real estate is very different from state to state. And in some states, you might foreclose on a piece of property with $6,000, $7,000, $8,000 in legal expense. In other states, it might balloon up to $20,000. So be aware of the differences in each state and make sure you're compliant.
Very. And then you can go back, Anna, and then we did our newsletter on our interview with Everett Sands of Lendistry, and it's pretty fascinating in what their business model is and what they're doing. One thing I liked about them, if I can grab the quote there, this is a nice quote. It says they are minority led, and they want to serve underserved markets, quote, with responsible lending. And Lance, I think that mission statement we all can get on board with.
Oh, absolutely, Bob. That's responsible lending, making sure that borrowers have adequate capital to stay in business, and just, we all operate in a business where our objective should be to help people get into business, help people expand businesses, but as a lender, look for ways to enhance that. Thus, when we talk about underwriting a loan, analyzing the working capital they have is always critically important, and making sure they have adequate working capital to be successful.
Lenders Tree is one of the 17 now licenses. They're dating it one of the 3 new ones. They obtained one last year from a bank, and they but they call them, Lance, they call themselves a fintech. But I love this last line. Everett said, "Hey, we want to use data to make quick and better and good loan decisions, but we're going to do reasonable interest rates and be very responsive and be very community oriented and responsible." So it'd be interesting to see what they're doing, and it's really done a good job in terms of taking or being a partner in all of the advantages, the different programs, especially in the state of California.
Absolutely, Bob. And that was a great interview, and I loved what they're doing.
Yeah, very good. We're doing a plug for your 2024 budget. Please consider our compensation survey. We've done that for 30 years, and we do a good job in breaking out average ranges and what people are being paid. Lance, we had a question, and this was an interesting question on your PPP webinar that you're going to be doing next week and cleaning up. And the question had to do with what should the lenders do in terms of, they term clawback or reserves. What are you recommending to lenders in terms of, okay, we got the money from SBA, we got paid for that, but should we reserve in case they're going to come after us for some of those fees? What do you tell lenders?
Well, I think a lot of it depends on the individual lender's portfolio and how much they have left. SBA does something called a post-forgiveness payment review. I don't think that SBA potentially is going to claw back on those forgiveness payments, but I think they could convert it back to a existing SBA loan with a balance and probably ask us to help service or collect on that loan. The guarantee purchases, I think if you, hopefully most people have worked through it, but not all. And so the guarantee purchases, there's lender additional information requests that lenders have to respond to help move guarantee purchases through the process and convert to payment. And there are also some denials that are taking place of guarantee purchases. Some are for reasons that I agree with. Some are for reasons that I don't necessarily agree with SBA on. But you just have to keep a close eye on the leftover loans, what their status is.
Yeah.
And
there is no blueprint on this. We're raising the question that it's something you should consider in your 2023 financial reporting on possibly doing a reserve, especially if it's a material amount of your department's, your bank's income.
Well, I think that a reserve might be based on the percentage of guaranteed purchases that are being declined and how many of those that you think will not be converted to payment. It also can be related to, there were loans, PPP loans, where a lender might have submitted it, got it approved, funded it, and then SBA canceled it. And a normal step would be to get that reinstated, but those reinstatement requests were declined. So how many of those do you have? So it's there are my good friend Jim Walters, who works with me on taking care of the PPP portfolio, guys. We say every day we wake up and there's a new challenge that we have to overcome. So, but you do need some reserve on your PPP portfolio.
That's what, at a minimum, it needs to be addressed on what you're doing.
Yes.
And I agree with Lance. You have those balances on your financial statement. You cannot assume that that's all going to be taken care of by a government check. So, and you may be on the hook for something, and you should look at that in a prudent, responsible, and go ahead, Lance, you're SBA good citizen.
Yeah, be a good SBA citizen and look at those reserves. Like I said, if you reviewed the IFRs, you would walk away and say, hey, we're going to get paid on all of these. But that's not how it's working out, and it appears that having a reserve in place for those loans you don't get paid on is a
Lance is going to address this and other issues. Be sure and take advantage of this webinar next Wednesday. Final pitch is your loan closing. Week 1 has been released. We'll get week 2 out next week. It's all been filmed. We're still in the editing part of it. But Lance, early returns, people really like what you're doing and love the updates.
Well, this is an 8-year-old project, guys. Well, you know this, Bob, and Delaney knows this. When Delaney was a young teenager, she would fly out to Los Angeles, and we would record the SBA loan closer. I remember one time in Bob's home office, Delaney was probably about 12 or 13. She traveled out with me, and we were recording the initial SBA loan closer certification course. We're now on about the 4th or 5th re-record. We re-recorded all the sessions to take into account the SOP 5010-7. So guys, get your people signed up. It's a good training.
We have a question. What is your experience with the new E-Trend processing? Are you getting your loans approved the following day, or how many days is it taking?
Well, I would like to be able to answer that question. I'll have to, if you give me a little time, I'll talk to some of the team members that are involved in putting loans into E-Trend at various institutions. But right now, guys, I'm just servicing a portfolio of PPP loans and regular 7A loans.
Thank you for the question. I can go ahead and answer that. We did an interview. Unfortunately, we had an issue. But from Boston and the America East, no new information came through. There are technical updates that are promises, but one of the concerns, and there were many concerns, but one of the concerns is there are delays on the processing of getting the number. It's inconsistent, and that is whenever you're dealing with inconsistencies and not set procedures, that's always a cause for concern. So SBA is aware of it. The lenders have raised that. Hopefully, encourage you all to go to Florida next month in Orlando for the FLAGO conference, and I know SBA will be there as well. Hopefully they'll have more information. So that is a concern. The agency has heard very loudly lenders' concerns about that, and that is a concern the lenders have. There's rumblings of, hey, it's not as easy as it was because we have to go through that 19-point assessment for eligibility. Correct, Lance?
That's absolutely correct. And any time, guys, there's a new process with SBA, there's a few chinks in the armor. Hopefully SBA will address it and get it smoothed out for us.
Yeah, and the question is, has the technical correction been issued? No, it has not. They're working on it. They understand that they need to get that out. There's some other wild rumors going out there, and I know other people have sent out memos on that and whatever, and all I will say is you need to wait for the official SBA response.
Yeah. Yes.
There's rumors out there that they're going to be rolling back a whole lot of stuff. We are operating under the August 1st rules. That's what you operate under. And if they come back and say reinstitute a franchise registry, fine. But right now we don't got it, and don't plan on it until SBA puts it out there. I'm pretty adamant about that. You cannot manage your program of, well, what if? You need to management by what's happening as of August 1st. Now, go ahead, Lance. I'll let you clean up that mess.
Well, the SOP 5010-7 is the rule book right now.
Yeah.
And as it sets, there's been no technical corrections. The discussion of what may or may not change is just discussion.
Wishful thinking is not a strategy.
So right now, guys, we have to operate within the guidelines set forth in the SOP 50.10.7.
Yeah.
And continue to do that until we're told otherwise.
And technical in my mind means technical. Correct missed typos, correct.
Well, the technical corrections are not going to really change your lending process necessarily. They're just going to correct some things.
Yeah. Now, if they want to go back and rewrite and tear it all up and rewrite it, that's a different story. But they're talking about technical corrections. They're not talking about a re-release. So you have to understand their wording, and you cannot. I've said enough. Thank you for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.
Have a good weekend.
Have a great weekend.